Good afternoon, everyone. In today's video, I'll be using our free Smarter Earnings Indicator to analyze both Apple and Amazon, both of whom have reported earnings today after the close. You can download the Smarter Earnings Indicator for free from our website. This is one of our first few How to Think Script tutorials. You can watch the full tutorial here if you're curious around how it's built, and you can download the indicator by clicking this big green button. Now, if I come in first to Apple here, I have a daily chart loaded on going back 5 years. Now, the Smarter Earnings Indicator really has two different buckets in terms of trade opportunities or setups. One is the idea of gaps getting filled, and the other is the idea of gaps running in the direction in which they gap. We call these gaps and goes, and we call these gaps that are filled. Now, using what the indicator is currently telling us for Apple for the past 5 years, and it's also counting today's earnings in this count, so this should actually be 20 for the data. We've had 3 times in which we've gapped up and then filled that gap. This can also include times in which we say have an inside candle where our opening price for the next day is below the actual high or low from the previous candle. So if this is an inside candle, then this condition will also be met, and that's considered a gap up that's filled. And this is what that looks like inside of the code. Now coming back here, so gap up that gets filled 3 times, gap down that gets filled 6 times. So this is definitely the more likely scenario. If we take a look to see where price is currently trading at, we closed at 163.64. Currently, Apple is trading below that at 159.95, so near that 160 handle. That's right around here, so towards the bottom half of this candle. If we open anywhere above this low, then this is going to be the scenario we're in, the gap down that's quote-unquote getting filled since it's an inside candle. However, the better scenario in terms of trade opportunities is if Apple does continue slipping, which if we see in after-hours activity here, we've had a big drop, a slight retracement, so if we continue seeing a sell-off, have a nice gap down lower here, near the lows that we tested in after hours, which was 153.50. So anywhere, say, right down here toward the bottom of this trend line, then we have a nice likelihood of this gap getting filled to the upside, touching the low. So that's what that would then imply. Now moving on to the second bucket here, that's a gap and go. Now gap and goes are scenarios in which, say, we gapped up, or in this case, say we gapped down, then we continue trending in that same bearish direction. So continue trending in the direction in which you gap prior to filling the previous day's high or low, depending on which direction you gap. So in this case for Apple, we had a total of 11 gap and goes. So definitely the more likely scenario here, 11 out of 20. 9 of those were bullish and only 2 were bearish. So this is definitely the less likely scenario here compared to bullish versus bearish. And on the bullish side here, we can see our average move is much greater, $1 that it tends to keep running after it gaps up, compared to just that 46 cents on the bearish side. So more likely than anything else here, that gap down fill scenario is the one that I think is going to be in play for tomorrow inside of Apple. Now that leads to other ways that we can also use that information, for which we can come inside of our Volatility Box platform. For all stock Volatility Box members, you have access to this. Click the Alerts tab right here. Once you click the Alerts tab, if you haven't already, enable push notifications, click Allow, and then go ahead and add both Apple and Amazon to your list. Now inside of Apple, what we're looking for, if I come into our dashboard, is tomorrow off of our conservative, preferably models, but the aggressive might work as well on the more aggressive trader style scenario, but it is a Friday, is if we get an opportunity to buy towards this lower edge of our volatility box, so when price is quote unquote at a discount, then that is the scenario that we're looking for. We're looking to buy those sell-offs inside of Apple, preferably after that conservative volatility box's lower entry, and this is going to be the price that it is tomorrow. It will update, so this middle level, we use that. If we get an opportunity to enter at that level, I think that would make for a really nice entry inside of Apple, looking for this potential of a gap fill, or even just playing that intraday volatility small little bounce to our target line, and that's again the LT level. So that's Apple. Now if we move on next to Amazon, let me load that in. Similar to Apple, trading inside of a channel headed into earnings. Unlike Apple, however, Amazon is trading well below where price action closed. We closed at 2891.93. We had sort of this triple bottom, if you will. Price is currently trading near that 2600 handle, 2630, which is right down here. So below all three of these bottoms and definitely well below current price action. So one more time here, we have this likelihood of a gap down, and on a 1 minute chart, this is what Amazon currently looks like. So coming back to that daily time frame chart, we go right down the line. So we have the same 20 earnings that we're looking at here. 4 times we've had a gap up that was filled, 3 times a gap down that was filled, and in this case, we're looking more like we're headed towards that gap down scenario. So this might be relevant here, which is 3 times out of the past 20, we've had a gap down that's been filled. Now, if we keep coming down, 12 times we've had gap and go. So this is a scenario that tends to happen more frequently inside of Amazon. Once we gap, we continue trending in one direction or the other. On the bullish side, that's been 8 out of the 12 scenarios. On the bearish side, 4 out of the 12 scenarios. So we do tend to gap up more frequently inside of Amazon and then continue running in that direction. But we do have some bearish sides as well. And the average move on the bearish side is $33.48 compared to the $28.20 inside of the bullish scenario. So here, once we do say get that gap down on the bearish side, more likely to see downside movement and continue to see Amazon trending on that bearish side. So that would be the scenario I'm looking at inside of Amazon, is the gap and go on the bearish side, and inside of Apple we had the gap down. Now, similarly to Apple, since we have a more bearish scenario inside of Amazon, if we get an opportunity to say a rally, a pop-up, anything of that sort, to short at our short entry, again, preferably off of the conservative levels, that would be a nice short side trade setup. Again, looking for at least that short target, but we also have this information right here where we know that Amazon tends to move, at least when it gaps down, about $33.48. And so that's an additional piece of information that you might be using to try and find some downside targets. All right, I hope you found today's video useful, especially if you are trading either Amazon or Apple earnings, or even the general broader market. I think this is relevant even for the SPY, the NASDAQ, and what I think will shape up to be a very interesting Friday tomorrow. All right, take care, everyone. Good luck trading. Again, if you don't have the Smarter Earnings Indicator, you can download it for free off of our website. I'll leave a link to this in the description box below. And for those of you that are interested, we also have a pre-earnings indicator to analyze moves running up into earnings available, but that is a pro indicator, which is available for free for all Volatility Box members. You can find a list of all of the earnings indicators, all of the indicators on our website on our tutorials page, tosindicators.com/indicators. All right, take care, everyone. Good luck trading, and we'll see you in the next update.